Take the first step towards online privacy. Get NordVPN.
I invested £25,000. Today, that investment is worth £5 million.
Say hello to our hero, the Hydrogen Energy Release Optimizer. Limitless power, zero emissions.
Good morning.
Good morning, good afternoon. Hello, Mr. Tom.
Hello, Rich. How are you?
Now, what is that in front of you? Because you don't normally have a blue Yeti in front of you, and you normally have a different background.
No, I'm actually in a different place because like my traditional desktop in my office is just dying by degrees. So I took the blue Yeti, which I normally use upstairs, and I finally just plugged it into my laptop. I'm in my dining room, and I'm not out on the porch smoking a cigar because it's 8 o'clock in the morning, and even that's a little too early for me.
Okay, all right. Well, listen.
Well, only just barely. Let's not.
Yeah, give it another half an hour, right? All right. Well, listen, great to have you on again.
When we get done with this, like I'm going to take the laptop outside,
Great to have you on, and people can find your work at tomluongo.me. I'll have all the links in the description below. You recently had an article published in Zero Haze. They regularly publish you, and I'm thrilled to have you as a guest. And hopefully in a couple of weeks' time, we've got it scheduled. You, me, and Alex Mercouris from the Duran. And also, I just said I'm recording with Alex Craner on Monday. And I know you,
which is great. Alex is a great guy. He's a great friend, and one of the real gentlemen in this industry. And I adore Alex, not just because he's bright and he's there's all the things that make Alex Craner, but it's because has the strength of character to walk into a situation where he may not, the person he's talking to may not agree with him about everything. And we can have an honest conversation about what we see and be generous. And I'm just starting to see way too much of that I've been in this space and it's bothered me for years, not for any other reason than because, it's not what we should be doing. As a community, we should be coming together, regardless of political affiliation, regardless of political ideology, regardless of anything, because these people are running the table on us. And I don't know what else to tell you, but it just seems whenever I see it, it just reminds me that there are good people in this space, and there are people who, when under pressure, reveal themselves as to be exactly who they are.
Yeah. Well, I want to say personally, because you and I think when we first started recording several years ago, I said, look, I'm very left wing, British left wing and everything. Mm-hmm. But you and I are willing to talk. We're both for freedom. We're both for liberty. And then I've learned a lot from you about the value of sound money. And I'm beginning to understand the bankruptcy of the whole Keynesian model and the fraud that is fractional reserve banking. Now, what I want to do in the beginning, because not all this video is going to be on YouTube. Right now, we're live streaming on Odyssey. And if people have any comments and questions or just to say hi, I would much appreciate that. I don't promise that we'll be able to go through any questions that people have, but we'll see how the conversation.
We will.
Yeah. But in the beginning, the first 10 minutes or so, when I upload this, will be on YouTube. So if you're watching this on YouTube, you want to come over to bit.ly/CryptoRichOdyssey to see the whole thing. Follow me on Twitter, CryptoRichYT, join my official Telegram announcements channel. And let us start by having a look at Bitcoin chart, gold and silver if you want as well, and Pirate Chain. I just thought. Now you've frozen, Tom.
Well, I did for a second.
Okay, you're okay now. But I don't know if you heard.
Yeah, it's a little cloudy here. I am on Starlink, so if the is in and out, just since we're live, it's just make me go back and redo it.
All right. Well, you can now share your screen if you wish to do so. If you want to start,
I will try. Let's see. Share screen. Let's do it. All right. So with that one. Boom.
And just for people to know, while you're doing that, Tom, is I am a member of your Patreon group. Twice a week you post these incredible podcasts where you look at Bitcoin and gold and silver. But what I really, really love and listen to you for and everything is the political and economic analysis, how you tie everything together.
Yeah.
Okay, so Bitcoin.
All right. So this is the weekly chart. So this is the weekly chart of Bitcoin. Let's just real quick. Isn't this a lovely bottoming pattern?
Yeah.
If I could, I would just draw a big box around it, shade it, and this is what I do on the market reports because I do it in PowerPoint. So I build the charts by hand in PowerPoint, and then I have the ability to do what I do with them. But this is a very good bottoming pattern. Each one of the big draft downs were where we saw the Fed go after a stable coin. And then we got this here. And this is unbelievably low volatility for Bitcoin. Six Sigma low volatility for Bitcoin. You know, Six Sigma being 6 standard deviations below normal volatility for Bitcoin, to the point where it actually broke all of my volatility statistics today. Like, because you're just like outside the central limit theorem at that point. So nice. Then the minute we get any kind of when you get a situation like this, just to, you know, in markets, and you have a low volatility like this, it tells you one of two things. It tells you either you've run out of buyers, or you've run out of sellers, or you've run out of both, right? Because there's not enough action to move the price. So the question is, what's going to happen next? Are we going to get another breakdown, or are we going to get a break up? Basically, are the bulls going to return and marginally push the price higher or lower? When you have a situation like this, and certainly what we've seen in Bitcoin over the last 6 to 9 months, is the removal of a lot of liquidity from the Bitcoin space because of Operation Choke Point 2.0 and all this, and the Fed and the Biden administration clearly going after the crypto market to destroy liquidity, because that's been their goal. It's like kill off the exchanges, kill off the on and off ramps into the, you know, between the traditional banking system, blah 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 blah. Great. Okay, so now that we know that as a background, so then you're sitting there going, okay, well, now what? Well, under those circumstances, you really do have a coin flip as to whether or not it's going to, you know, they're going to be able to push it lower or push it higher. But knowing full well that they've been using futures as the means by which to wag the dog of the Bitcoin price.
Oh, we just lost him as he's wagging the dog of the Bitcoin price, and I can't do the sort of analysis that Tom does. But we do have this bottoming pattern, waiting for him to come back online.
Volume environment, you have the opportunity.
Sorry, Tom, you just froze.
Yeah, no problem. I'll go back. I'm sorry. This is the best I can do this morning, guys. It is what it is. So when you have a low volume or a low participation environment, when there's a low liquidity environment, it doesn't take a lot for a marginal buyer to come in and move the price. Okay, it's just that's what we've seen in Bitcoin, and it's been to the upside, and it's been pretty good, pretty strong. And only, you know, we had a nice move off of 15 into the 20s, and then a nice correction, and what could have been ugly. But here's the thing: here's your uptrend, and then you have the counter trend, and then to assess the power of the counter trend against the previous trend, you have to ask yourself, are you going to get a reversal signal within a certain amount of time? Because time matters, because time is what tells you how much energy is being spent by people currently in charge of the market, in this case the bears, as to how much energy they're having to spend to push the price down. If they can't get a close below the low of the last bar in the uptrend within 2 bars, which I call a 2-bar reversal as opposed to a 1-bar reversal where they do it in a 1 bar, they're likely have already spent most of their energy. They spent almost all their ammunition, so that when they push the price down again in that 3rd bar, it usually it's what the 3-bar reversal just doesn't have any predictive value. 50% of the time they continue, and 50% of the time they reverse. Well, in this case, they reversed, and we kind of should have expected that because of the setup, right? Because of this low vol setup, all it took was a couple of people coming in and to buy Bitcoin and push the price up. And then they had to spend a lot of energy pushing the price back down. And as volatility has returned to Bitcoin, so has volume, because now people are interested in it. And as the financial system has become unstable, people are looking to use Bitcoin to get the ground. So the interesting part was during Silicon Valley and Credit Suisse, what did we see? We saw Bitcoin respond positively in a safe haven kind of trade. You know, I'm not going to use the store of value argument. I will use a safe haven trade, because that's what we're in the middle of right now. Bitcoin, gold, the U.S. Treasury, even stocks. This is all a safe haven trade. This is all money getting the ground. People not worried about the return on their money. They're worried about the return of their money. They're worried about the fragility of the banking system. They're worried about all of these things. Now you can argue as to whether or not, you know, this was manufactured by whom and why and all that stuff. We can get into all that. But the reality is that in the aggregate, that's the kind of thing we're seeing. So when we go cross market and I shut down that and I move over to something like gold, right? Because we had a lovely close again this week in the price of gold. We'll use a slightly different chart from investing.com. Actually, I won't. I can't break this one out. I'll just make it big. Fuck it. Hold on for just a second. All right. So that when we look at this on the weekly chart and we bring it out to a year, what do we see? Well, we saw a bottom in November and a move out. And then, you know, to start the year, a little bit of a correction. And then boom, you know, a 1-bar reversal of this chart. Notice that this is a very weak 2-bar reversal here, and then it immediately reverses, and then we get a little bit of consolidation just below 2,000, and then we finally get the close above 2,000, which is psychologically very important. Round numbers especially in gold and silver, very, very big deal. Pushing through and closing above 2,000. Again, this isn't the cash market, not the futures market. There's about an $18 premium to the upside, or $15 premium to the upside on the futures market, which is also bullish when it's that large. When it's $3 to $5, it's not a signal. But when it's $15 or $20 in the opposite direction, that's significant. So that means there's a whole lot of people, trying to pile into gold to shore up their dollar risk. And then the cash market to get above 2,000, again, money's going to the ground. We close above these highs back in here. If I were to go back out and give you the monthly chart now at 5 years, you can see how significant this all is, right? And it's not, we have a double top here, right just below 2,100. But I want to note something for you. This is, I've got highlighted now, the March close, which was above the February and January high. It's also above the 2022 high, but not quite above the high close, but not quite above that 2020 high close. April, if we close here, even if we don't close above the all-time high in April, which I by the way, I don't expect to see happen, just because I don't see the Fed, the Fed's willing to lift its boot off the neck of gold a little bit. But if we get the highest high close of all time, that's significant, because I've come to realize over the years that not just breaking the highs is what's important, because that tells you that because highs and lows tell you where the emotional extremes of the markets are. This is where the supply of sellers overwhelm the supply of buyers, right? This is where the supply of buyers overwhelm the supply of sellers. That's what highs and lows are. But closing prices tell you what the market's real sentiment is, right? Which is, oh man, we ended this big time period here. And so getting a high close, especially in markets like gold, like Bitcoin and others, very important politically important markets, they wind up being almost as important as the all-time high or the recent lows themselves. So this is this is a major battle in a war for 2,100 in gold. That's all I'm saying.
Okay. Do you want to look at silver?
So that looks good. Yeah. What's that? We can absolutely look at silver. Silver's situation is far more complicated. So, and far less bullish, by the way. All right. So let's pop into silver. Let me see if I can make this a little bigger for people to see. Okay. So looking at silver, so this is the weekly chart of silver. Huge, huge, beautiful run here in silver. Now, if you were to back this out and look at this from a monthly chart, and actually if you look at it from a quarterly chart, which I can't do on investing.com, the month is the longest time period I have to go after. As a matter of fact, one of the things I do is I hand build quarterly charts for my patrons every quarter. All right, I have quarterly charts of silver, gold, Bitcoin, the Dow, oil, all these things. But let's look at what we had happen here in silver. So here's the downtrend into, coming off the highs from 2020 and 2021, right? We got a big 5-bar downtrend here, and a new low is established in the 17th, so it's right around 1750. We got a violation of the last high in the downtrend, which gave us the opportunity for a reversal signal. If we had closed above that, we would have gotten the 2-bar reversal. 1, 2, that would have been the 2-bar reversal. We didn't get it, but we did get a 3-bar reversal. So here's that moment where the 3-bar reversal, continued the trend. But notice what I said earlier. Once it runs into resistance right around 20, into this 2450 area, this 2450, 2425 area, and look at all these high tails in here to show where silver couldn't close. Then we had a reversal. So we got a 4-bar uptrend and then a 2-bar reversal, closing below the low here. That's a 2-bar reversal. It's significant, and it freaked everybody out in February. And then we got a new low, and then we got a big, huge reversal in March, or big, huge move against that reversal in March, but no close above it. And now look at where we are today, trading today in the early part of April. I'm sorry, above that 2450 area at 25. But note the horizontal resistance in here. This is going to be a slog to get out of the 25 to 26 area. Gold is up against its all-time high, and silver still trying to get back to effectively par on the long-term chart, which is this 22 to 30 area, when the all-time high in silver is $50. Okay, so this is a fundamental difference, and a lot of people will argue, and I think both naively but historically, that the silver to gold ratio is way too high, or the gold to silver ratio is way too high, and that silver is radically undervalued relative to gold. I don't necessarily agree with that. And the reason I don't agree with that is because I don't view silver as a monetary metal anymore. I view it as an industrial metal, and I view it as the harbinger of the health of the tech space. It's like the leading indicator of the tech economy. Like copper is the leading indicator of the industrial economy, because when the industrial economy is booming, the demand for copper wire and an expanding electrical grid is what drives copper prices. Well, in tech space, what drives tech, the knock-on effect of a booming tech industry is silver demand, because that's why silver is no longer a monetary metal, because every central bank dishoarded all of their silver in the 50s, 60s, and 70s, because the rise of computers was going to see the properties, the electrical conductivity properties of silver and its other properties were going to wind up overwhelming its monetary demand. Its industrial demand would overwhelm it. Mises' regression theorem clearly states that once you have a competing demand for a commodity that is no longer monetary, that it will leak away and something else will become a more monetary asset. And in some ways, you can almost argue that Bitcoin is replacing silver as the antipode to gold, right, in the monetary metals space. Okay, whereas it would free silver up to be the industrial metal that it needs to be. So that's a controversial and it's a controversial point in the precious metals industry. Commentary at, but guess what, folks? The numbers don't lie. The silver to gold ratio has been rising on an average basis for 20 years. Go grab the monthly closes for silver and gold. You can get them from investing.com. Go back to 2008, plot the ratio, and then run a linear least squares regression best fit line, and you'll see a beautifully upsloping line from 2008 from about 45 to 85 in the silver to gold ratio. That's the line that tells you whether silver is cheap relative to gold, not natural abundance or any of those other arguments. Anybody still selling the natural abundance arguments between silver and gold, which is about 13 to 1, is a shill, and is someone you should not listen to. And they are my peers in this industry, and I will tell you that flat out, that they are still arguing to keep, and they're doing so, frankly. I don't know why they're doing it. I won't speculate.
Okay.
I won't badmouth anybody any farther than that, but I want you to be very wary of anybody making that argument. How's that?
Okay. But one thing I saw on Twitter was Silver Squeeze was trending. AppMex had their best Thursday ever. Premiums are like sky high for physical.
Sure.
There's obviously increasing retail demand.
Mm-hmm.
And then that doesn't necessarily get reflected.
Well, I'm not saying that people won't use silver to hedge their dollar risk.
Yeah.
Right? Silver still has a small monetary component. Okay? Yeah, it does. When gold gets really expensive, people rotate to silver. Yeah. Like, dude, when gold is at an all-time high, I'm not buying gold, but I do go to AppMex and do consider buying some silver. Okay, like, and my argument here is very simple, and I've said this to patrons for years. Plot the silver to gold ratio, or whenever I post it up, use it as a tool for you, because I publish all the slide decks for the market reports along with them, so you've got my slides, so you can refer back to them. You don't need to review the silver to gold ratio more than once a year. So if I publish it 2 or 3 times a year, you've got the resource, right? You don't have to do the work yourself. But if you want to do the work, go right ahead. It's not a particularly difficult thing to do in Excel. To build a line chart to build a candlestick, or to build a line chart and then do a least squares regression. It's not hard. But use that. And I only tell people is that when the ratio is below the line, gold is cheap relative to silver. So you should buy more gold. If whatever money you're going to allocate to the space, allocate more gold money to gold than silver. And I usually tell people 70-30. So say, for example, you have $1,000 to spend at the end of the month on gold and silver. Well, you should put, when it's below the ratio, below the line, buy $700 worth of gold and $300 worth of silver. When it's above the line, do the exact reverse. Buy $700 worth of silver and $300 worth of gold. That way, in effect, you dollar cost average against any volatility, any extremes of volatility, and you can use the ratio to your advantage. But at the same time, do so understanding that, you're still buying into the current bull market in one versus the other at the same time as speculating against the one that's in the bear market, because that's really what you're dealing with. And that's I think that's the soundest and sagest advice that I can give in how to play the space and to buy physical metal. The premiums on APMEX for gold are just as bad. They're 15% over spot for liquid coins like American Eagles. 1 ounce American Eagles trading at 15% over spot is unheard of. They're usually 3 to 5, and in really tight markets 8 to 10. So clearly, there's a lot of people worried. And I just saw something on Zero Hedge this morning. We saw another $275 billion worth of bank deposits leave the banking system in the last couple of weeks. People are rightly scared of the financial system collapsing. Now, have they been gaslit into this somewhat? Yes. Here in the US, certainly. But notice how nobody's reporting about how much money has left the European banking system. See, what is said is important, but what is not said is even more important. And the conspiracy of silence about how fucked up the European banking system is your tell that they're the ones seriously in fucking trouble.
Yes, and now Tom, that may be something that we get into. I want to have I don't think you'll have it ready. Let me see if I can share my screen and
sure.
Have a look at there's my NordVPN, and people can go click on the affiliate link, and it helps me out. Where's my chart for silver? Sorry, for Pirate Chain. And people should know I am one of the crew at Pirate Chain. And I come.
Oh, is that the weekly chart? That looks good.
That is the weekly chart. Let me just hide that.
Get rid of all that EM that moving average spam. You don't need that. Just keep there in front of you. Just don't even get rid of that shit. Just dial in, Rich. You only need from May to May. Okay, seriously, don't worry about it. I've
got rid of them. I've got rid of them. Right. I've just got.
Come on, keep it simple. It's like the story's right in front of you. Holy shit. Dial in, make it big. There you go. That looks good. See, all right, there. So we hit a bottom back here at the end of the year. What a shock! Everything was getting crushed into the end of the year. It was this January. Yeah, there it is. And then beautiful 2-bar reversal, closes above that high. That's nice, but runs right into the buzzsaw of this. What do you call this horizontal resistance here? We putz around for a while. It falls off, and then once we retest the low here. Notice how you can't close below these two lows here. You got a violation, but not a close. You got another violation, but not a close. And notice how volume is starting to increase. The volume increasing here, and we're getting really close to a reversal of this 6-bar downtrend. watch Pirate Chain's close. Highlight this bar that I've got my the third bar in, the last red bar. What's the high there? The high is 39.74. Yeah, so watch to close this week above 39.74. Based on this chart, doesn't matter when they update their charts. I think they update. Is this okay? It's CoinTrader Pro, so it'd be trading view. It's probably Tuesday. Goes Tuesday to Tuesday. So by Tuesday, if you get a close in Pirate Chain above 40 cents, that's a 2-bar reversal of the 6-week downtrend on high volume. That's a breakout. That's
Ooh, good time to.
That's a massive buy signal.
Okay.
So, Rich, your job, your mission, should you choose to accept it, is this DM me on Patreon and say, Tom, can you look at Pirate Chain? It would be really good. And I can do it in the market report.
You should include it in the market report.
I only include stuff that the patrons actually send to me.
Okay.
All right. You see what I mean? But I mean, we're doing it here, so I'll just refer to this video. I'm kidding, of course, but
yeah. Very good. Okay. And
but then this right here, this rising volume off this low.
That's
dude.
Okay, get some Pirate Chain.
Dude, that's the setup. That's one of the best high quality setups you can ask for. Now, is it going to go much above 45 cents here? Well, with the amount of volume you're seeing to push higher here, maybe. And if it does, and then you watch when it gets to 45, there may be one more rejection to 45, and that'll be okay. And if that happens, right, then what you say is, okay, if there's a rejection above 45 cents, which is the highs back from January. Mm-hmm. So yeah, those highs there you go. I'm doing this, putting my mouse over this thing, and I'm like, you guys can't see my mouse. I'm like, so there may be a rejection of 45 cents, and then it falls off. You watch where it falls off too. If it only falls back to 40 cents, then you buy there. And then you wait for the breakout, the final breakout above 45. And yeah, there's a triple top at 45, right? You're highlighting the second top. You go back to October. There was a cluster of highs back in October, November. That's one top, the second top, and then the spike into 45 cents in March, 4 weeks ago. Nope, in March. Keep going. Keep going. There you go. That one right there. So that's your triple top. I would say, well, if it's going to approach 45 cents, this would be the time, especially on high volume, that it breaks right through it, and then is going to run to, you know, some Fibonacci series or something. And then it's been so long since it's traded in that area. You know, time doesn't really matter. You go back to July, the July high here, whatever this is. Now you don't have to go back that far. There you go. Just the July 2022 high. So not that one. This one right here. There you go. There you go. That one right there. So what is that? 66 cents? You know, can you live with a 75-cent move? I'm not saying that has a lot of power, because it doesn't. But, you know, that would be the first place I look. And then you can overlay that with like Fibonacci series or some, you know, some appropriate exponential moving averages. The 22,
not
the
every
55, the
single one that's
144, the
available.
288, but nothing other than those.
Okay. All right. Very good. Well, listen, for those of you that are watching when this goes out on YouTube, you now want to come over to Odyssey, links in the description below, to catch the rest of the conversation, which will be all about the macroeconomic political excitement that's happening in the world. Oh my God. Oh my God. Oh my God. I saw the article you published, that Zerohead published, about oil. I mean, I don't know where to begin. It's such a mess. And then what you were saying about the European Union.